Good afternoon, traders. This is Tony D from easyMarkets in Sydney. We've had a relatively stable overnight session. US dollar selling has continued though. You're seeing the euro, the pound, Aussie, and the Kiwi, and the Canadian dollar all making small gains against the US dollar. Nothing crazy here, just a little bit positioning adjustments. There seems to be a little bit of now that all the good news is out for the US in terms of tax cuts and Fed raising rates, there's a little bit of lack of follow through and a little bit of profit taking. You're seeing the euro very much set up in a nice range. If we get back above 119, then definitely 120 will be a magnet there for the buyers. A big level for the market to get past. If the euro was to continue to lead the rest of the majors higher, you may see then a breakout in terms of a new trend. But a little bit early to say that, given that next week is the first week of data, heavy data week, and also US data next week is very, very important in terms of wage inflation and also the Fed timing. So the big debate for 2018 is how many times is the Fed going to raise rates. So at the moment it's three. Or two if you're looking at the market prices. There is definitely some Fed members out there though who are looking for 4 rate hikes next year, and if that was to be the case, the US dollar strength could definitely continue, as a lot of the other central banks aren't on the rate hike agenda just yet, and you're looking at something where it's very much up in the air for 2018. We're looking at the euro. How long will they taper for? How quickly will they taper? And what will their plan be for eventually raising rates once they finish their QE program? That's a big important question. Either the euro is going, to 125 or to 140, depending on that speed of the actual transition. And all that comes down to globally actually is going to be inflation. Inflation has been the missing element, the missing piece of the puzzle for central banks for most of the last couple of years, and most importantly, wage inflation. So next week's NFP is the wage inflation number that the Fed would love to look at and see some strength in there. The market may actually be much more volatile next week than normal in January. For those who would trade Bitcoin, you're looking at the Bitcoin chart here in front of us. We're seeing a sharp drop here on news that the South Korean regulators are going to be cracking down. Now, specifically how they're going to do it in terms of what new measures weren't really discussed, but the ability to close down exchanges, the requirement that there be no anonymous trading in South Korea, definitely seem to take it as a negative here. We've seen the market drop as low as 13.8. Has stabilized now back above 14,000 though. It did come at a bad time though for Bitcoin. It was supposed to be recovering from last week's huge sell-off. Now we've got the definite rollover look on here on the charts. Got to keep an eye out here. If we get back below this 13,000 level, that could start to get sellers a little bit more cautious. So the buyers a little bit more cautious, and the sellers give them a little bit more in terms of ammunition to continue and maybe even retest that 12,000, 1150, 11,500 lows from last Friday. That's not what you want to see in an uptrend. You want to see the market actually stabilize much higher and continue, back above 16,000 by this time next week. Alright guys, if you have any questions about what's going on in the market, there's no data out this week, so it is all just a small price action. Do give us a call on the numbers below. If you're not a member of the easyMarkets dealing room, you can join up by joining our active traders group. This gives you access to personal analysts like myself and also our tightest spreads. Cheers.